There we go.
There we go. Thank you.
Yeah. So my technical consultant in-house just said, are you new at this? And you all know the answer from what that just happened. So go ahead, Dee Dee. Sorry for the delay.
Welcome, everyone. I'm Dee Dee Kamhai, and I want to welcome Patrick and Ilona to this presentation. I have known both Patrick and Ilona for many years. Patrick has been my tax consultant since I came to Lake Chapala 7 years ago, and I've known Ilona for years. Susie, Patrick will be talking to us about the unique taxation issues faced by U.S. citizens living abroad, and he'll give us a lot of guidance regarding foreign accounts, investments, rental income. I'm reading right off the screen. And then Ilona is going to address the programs that are in place for the DA advocates for tax fairness. So it's going to be a very interesting discussion. Patrick will begin, and Patrick has some PowerPoint slides, and then Ilona will take it up from there. We will have them speak before we take any questions. And as you heard, Emily will be monitoring the chat. So if you have any questions, put your hand up and you can put them on a chat, or we can wait until after the presentation and ask your questions, okay? So Patrick, it's all yours.
And Patrick, you should be able to share your screen now.
Okay. Yes,
Hey, could I just say, this is Emily. When we say put your hand up, we mean to type into the chat * hand up, not to use the Zoom hand up, but to actually type it into the chat. Okay?
Thank you, Emily.
You're welcome.
Okay, thank you everyone for attending today. And if you have any trouble hearing me, please let me know. So my name is Patrick Oden. I operate Lakeside Tax Service, which we do taxes for US people who are from the US, and we also do Canadian taxes. We have three main people helping us. Ray Hickey is our enrolled agent, Carla Dedoff, and then myself, Patrick Oden, and I'm a certified acceptance agent. I'll tell you a little bit about that later. We're located in San Antonio, Tlayacapan, and we've been in business for 10 years. And together, the three of us bring over 75 years of tax experience. So today I want you to know your obligations when living abroad and how those may differ from when you're in the US. I don't want to instill a sense of fear. I don't want you to be afraid of these foreign issues. If you're unsure about making decisions, I urge everyone to seek professional help before making any decision that could affect your taxes. Many times people come to us after the fact, and it's a little bit too late to help. If you look at the back of your passport, they have reminded all US citizens that when working and residing abroad, they are required to file and report on their worldwide income. So one question that we get frequently, all the time, is, what address should I use? I'm living in Mexico. What's the address that should be on the front of my 1040? And the answer from the IRS to that question is, you should use the address where you can receive easily and quickly notification in case they send you a letter. The IRS almost always communicates by a letter unless they have previously contacted you and you're expecting a phone call. The IRS generally does not want to know where you live. In fact, when they do want to know that, they ask for it on certain forms. And this form would be the 2555 or the foreign earnings report, where you report your foreign address and you report your employer's address. One thing that you should take care of is, most of us who are using a US address are using a friend or family member. And beside making sure that that person is reliable, you should be careful when using California, Massachusetts, New Jersey, and New York addresses. The reason is simply that those states are the most aggressive in tax collection. And we don't want you to have any problem. But then there's also where if you need to use one of those states, you can do so. And we'll go over that later. One thing you should use when you are doing a tax return and you're using the address of a friend or relative, you should always put in care of the person who's living at that address, because you don't want your mail to be rejected by the post office to be returned to the IRS saying that that person doesn't live at that address. If you use an in care of name, then there's no chance that the mail carrier will make a mistake. So let's talk a little bit about tax residency and where you're a resident. We always look at the facts when we determine where you are a tax resident. And the facts need to look at the intent to establish the residency. This is not necessarily the date that you got your green card, your FM2 to live in Mexico. It could be the date that you came down and rented an apartment, that you bought a house. Whatever date that you consider your intent to live in Mexico was first established, that's when your residency begins. As a resident of Mexico, as a foreign, as living abroad, you can exclude up to $108,700 of earned income. And this only applies to earned income. And when we say earned income, this is from wages and salaries, self-employment income. It's not from passive income such as Social Security, pensions, dividends, and that type of thing. You may be a part-year resident of Mexico. For example, maybe you've moved from California, and so you come down. Many people tell me, oh, don't worry about doing a part-year tax return. Let's just claim resident of California for the entire year and start over next year. Until I tell them exactly how much they might be saving, just say declaring 4 months as a resident of Mexico, and they usually change their mind. So you are no longer a resident of any US state when you move to Mexico. That's very difficult for some preparers to understand in the US. How can you not be a resident, and how can you not have to file taxes in any state? But it's no different than moving to a state like Texas, which has no state income tax, or Florida. You're just living outside of a state that has an income tax. You're living in Mexico. And the tax treaties apply to you. And that's mostly to protect you from taxes that Mexico could levy on your income. So some of the issues that are related to residency is when moving abroad, if you are considering moving, I know that most of you already live here in Mexico, but if you are still declaring as a resident of a particular state, you may want to file a part-year or a non-resident return. And the reason is that this notifies the state that you're leaving and that they really should not look for any tax returns from you in the future. The one time that you will need to file as a state tax return is if you have rental income or income that is sourced within a state. So generally that's rental income. If you have a house that you rent out in Oregon, then you're going to need to file a non-resident tax return in Oregon. That means that you will pay tax only on the income that is derived from Oregon and not all of your income. If you're a partnership and you receive a K-1, you also may have some state tax issues to deal with. One thing you want to be aware of is when it comes to residency are some traps. And one is driver's license, because most states consider you a resident if you have a driver's license. Now, if you've moved out of the state, there's no reason to give up that license. If you renew the license, the state could always make the claim that you are a tax resident because you renewed your license. Really, I have never seen any problems related to driver's license, because generally the motor vehicles department does not speak with the tax department. It would only be in the case that you really had a disagreement with a state that they would look at that kind of thing. Some states, especially in the north, I've even seen if you have a hunting license from that state, they will consider you a resident. And almost all states will consider you a resident if you have been there 183 days or more physically during the course of a calendar year. One thing that many people are concerned about is their voting address. Your voting address alone does not constitute residency. Your voting address is usually the last residence that you had while you were in the US. So you don't need to worry about having to pay state taxes just so you can vote in that state. So I want to talk a little bit about the foreign earned income exclusion. And I know that many of you are retired, but we have more and more people that are working from Mexico. During the pandemic, there were a number of people who decided to come down here and work because it was just as easy to work from here as it was from working in the US. So in 2021, the exclusion amount was $108,700. This applies to self-employed individuals, people working for a US or Mexican company as a local employee, and it also includes telecommuters. Maybe their employer says, okay, you're on the payroll in Texas or you're on the payroll in New York. But if the work is physically being done from Mexico, if they are telecommuting, then they can claim the foreign earned income exclusion, and that essentially excludes that income from federal taxation. Active real estate can also apply for this, but specific rules apply. If you work and you have an S corporation and you're working abroad, you may want to consult a tax advisor about your salary to distribution mix because it may be something you want to change. And for those people who may have children and are working abroad, the foreign earned income exclusion may not be the most beneficial because using that usually disqualifies a person for the child tax credit. And so the alternate to that is to select a foreign tax credit, which allows any taxes paid in a foreign country to be applied to your US tax burden. And then you can still receive the child tax credit. Just a note about Social Security and self-employment tax is that there is no exclusion and no foreign income taxes that can be used to offset Social Security tax for self-employed individuals. This is a tax of 15.3% on the first $142,800 of income each year. The only way to reduce Social Security tax legally is through a corporate tax structure such as the S Corp. And the reason the US does this is that they want to make sure that people who are working for themselves abroad if they ever move back to the US or wherever they may be in the world, that they're still paying into the Social Security system. And just as if they were working for themselves in the US. In fact, I have a lot of clients who are working here in Mexico, primarily Mexicans who have US citizenship for one reason or the other. And these people are very dedicated to paying their Social Security tax because they know that in the future, their Social Security is going to be worth more than anything that they can receive here in Mexico. I want to say a word about Mexican taxes as well. Mexico has been very lenient with foreigners so far, and we're lucky in that regard. If you have substantial income that is derived from Mexican sources, this may obligate you to file a Mexican tax return. Many people tell me, yes, but they've already taken those taxes. And that may be true. It could be that you're entitled to a refund. But when you have a large amount of income sourced in Mexico, even though there is withholding for the Mexican government, you may still be obligated to file a Mexican tax return. And that's something you should consult a Mexican accountant about if you're in that situation. As well, any local rentals are subject to Mexican tax, as well as reportable on your US tax return. And self-employment is taxable in Mexico. I myself am self-employed here in Mexico. I'm as a persona física, and so I'm subject to those taxes as well. One thing not to do is don't ask a Mexican accountant to help you avoid taxes. The reason is Mexico, unlike the US, has the accountants really under the gun. SAT, which is the IRS equivalent, is really trying to make sure that the accountants are their first line of defense and that the accountants are doing everything correctly. And so the local accountants don't want to help you to avoid taxation in Mexico. They could lose their license. And so I think as foreigners, it's not very fair of us to ask them to do something that could be a bit underhanded, even though it hurts because taxes here in Mexico are higher generally than in the US. One thing that many people get worried about though is they say, oh my goodness, if I have to file a Mexican tax return, then they're going to tax my Social Security and they're going to tax my pension. That's not true. The reason it's not true is because there is a tax treaty between the US and Mexico, and that treaty protects Social Security and pension. Any pension that is received by you based on work that was done in the US can only be taxed in the US. So a note about foreign rentals, as I said, those must be declared in Mexico. I know that some people do, some people don't. However, the income from a rental, even in Mexico, must be declared on your US tax return. You can also deduct all of the related expenses. Many people tell me, oh, but we can't get a factura. Under the US system, the factura is not necessary. Any little note or slip of paper will generally do. And in the event you can't get something, a note or a receipt to establish an expense, I suggest you take a picture. Any improvements you do, any items that you buy for a house or for a rental, always take a picture of the item so that you can prove that is something you bought for the rental. One difference between US rentals and rentals in a foreign country is in the US, they use the general depreciation system, and foreign property is required to use the alternative depreciation system, or ADS. For example, the residential property in Mexico would be depreciated over a 30-year time span versus 27.5 years for a property in the US. This was part of the Tax Cuts and Job Acts. And if you remember, that was part of the Trump administration's tax plan. And I find it kind of funny that for a president who had substantial foreign holdings, that one of the first things they did was reduce the depreciation period from 40 to 30 years for residential rentals abroad. When you have a rental, that can be used for up to 14 days for personal or vacation use, and you can still deduct 100% of all of your expenses. So if you live in Guadalajara, you have a rental in Puerto Vallarta, feel free to vacation there for 14 days a year. You don't need to do anything. All of your expenses related to the property are still fully 100% deductible. Also, any days that you are staying in your rental property and your primary objective is to repair or improve the property, those days are not considered personal use. So if your property happens to be at the beach, but you're there painting and then you go out to the beach in the afternoon and to eat at night, don't worry, that's not considered personal use if your primary motive is to repair the property. Many people may be familiar with a 1031 exchange. This allows people to transfer the capital gain in one property to another property without recognizing that gain. 1031 exchanges are allowed, but it must be foreign property to foreign property. It is not country specific. So if you sell a rental property or an income producing property in Mexico, you want to buy something in Argentina, you can do that just as long as it's foreign to foreign. So one of the obligations that we have when we live abroad, or even when we live in the US, if we have foreign accounts, and those accounts meet certain limitations, we're required to file FineSend 114, which is formerly known as the FBAR. Anytime you have a foreign account, even if the account has just a small amount of money, if you file a tax return and if you file Schedule B, you're required to check the box at the bottom that says I have a foreign account. Doesn't mean that that's reportable. If you're not required to file a tax return, there's no reason for you to file it just to report a foreign account under 10,000. And if you file a tax return, but you don't have a Schedule B, you're not required to file the Schedule B just because of that. If the value of all of your non-US bank accounts exceed $10,000 at any time during the year, then the FineSend 114 is required. The due date for the report is April 15th. There's an automatic extension until October 15th. And with this, there is no form to file for that extension. It's just an automatic extension. Also, the FineSend 114 must be filed whenever you have your name on a foreign account that belongs to a church or temple, or maybe a club or a charity. If you are a signer on the account, even though those are not your funds, you're considered a fiduciary. If those accounts go over $10,000, then you're required to report that. The obligation to report does not rest on the church, temple, charity, or club. It rests with you, the taxpayer, to report that information. And failure to file this report has a penalty of $10,000 as well. One thing, though, I want to point out on this, a lot of people get scared about this report. There's no reason to be scared. We're just doing something to report income that would really be automatically if the account were based in the US. So don't be afraid of it. And then the other thing is, don't be afraid if your FineSend report doesn't match the money you really had abroad. And let me explain that. Sometimes people will come in and they'll say, yes, I had an account and it was over, say it was $40,000. I have to file a FineSend report. Fine. Then they tell me, oh, but I transferred that money from, Intercam over to Bancomer during the year. So now we have two reports. We have two accounts to report, and each account had a high balance of $40,000. So it looks like on paper that you have a balance of $80,000 when really that was never the case. But you shouldn't be worried about that. This does not affect your taxes per se. Another report is foreign asset reporting. This is very different and it has higher limits. So for a single person, if you have foreign financial assets the last day of the year, or more than 300,000 at any time during the year, or if you're married filing jointly, those limits are $400,000 on the last day of the year, 600,000 at any time during the year. You must file a Form 8938, which is part of your tax return. This applies to bank accounts, brokerage accounts, and one big difference between this report and the FineSend report is this account can include the value of foreign life insurance. One thing that it does not include is any real property, such as the value of your home, the value of a rental property, or the value of cars. This is only for financial accounts and financial instruments. The due date for this is April 15th, and if you file an extension of your tax return, it'll be October 15th. Many people come in and say, oh, I have this friend and we're going to business together. I gave him some money. He's going to make me 25% owner. I have some bad information when it comes to that because there's the Form 5471, which is information return of U.S. persons with respect to certain foreign corporations. Basically, a U.S. citizen or legal resident who acquires 20% or more of ownership or control of a foreign corporation must file this report. It's due with the tax return, either on April 15th or October 15th. There's a penalty of $10,000 for failure to file. We can usually get a 1 year of amnesty, but when a person comes and says, oh, well, I bought all of these, I bought into this company 3 years ago, it really presents a problem for us because the IRS could levy up to $30,000 of fines, and we only have a way of really getting rid of 10,000 of those. Just be very careful. It's not to say that you should not own a foreign corporation, but if you own a foreign corporation, or if you own, if you're partners and own 20% or more, this report is required. It's very in-depth. It requires us to put the profit and loss statement as well as the balance sheet on the tax return. So it's quite a bit of information, and it's really intrusive, but the reason is to prevent tax evasion by using a foreign corporation. Some traps to avoid when you live and invest abroad. And the biggest thing I see most often where people violate the rules is purchasing foreign mutual funds. It's easy to do. All of the banks are trying to get us to invest in their fund of the day, but those mutual funds violate the PFIC rules, and that's passive foreign investment corporations. The scope of this is really beyond the presentation today, but it boils down to this. A foreign investment does not follow the US rules. It does not give you the information that you need to properly report your income to the IRS. And therefore, the IRS, if you have income, this type of income, they will be taxing you at the maximum rate of 37.5%, unless you have asked for a I think it's a QEF. But as I said, that's beyond the scope of this presentation today. What I advise people is that if you want to invest in Mexico, instead of purchasing mutual funds, you purchase individual foreign stocks through a broker, or you invest in interest-bearing bank accounts and certificates of deposits. Those type of investments do not violate the PFIC rules. Returning to the addresses, people say, you know, I have a foreign address and I really want to use it. You know, I know it's going to take longer for the mail to get here, and that's fine. But the IRS has a process right now called identification or verification of identity. Every year, a certain number of taxpayers get sent to this process. Sometimes it's because of a change of address, but sometimes nothing has changed and the person has been sent to this process. I myself have been sent to it, and my fingerprints are on file at the IRS because I'm what they call an ERO, and yet they sent me to identity verification. The first step in the process of identity verification is to receive that they mail you a letter with instructions on how to pass this process to your home. If your address is a foreign address, you may not get the letter. If you haven't gotten your refund, you call the IRS, they tell you you've been sent to identity verification. You ask for the letter to be sent out again. They send it and it arrives 4 to 6 weeks later, maybe a couple months later, or it doesn't arrive at all. It makes passing that process very time consuming. And if you're one of those people who unfortunately get sent to identity verification and is waiting on your refund will not be issued until you pass that process. So that's another reason why I discourage the use of Mexican addresses, especially on US tax returns. Another trap you might want to avoid is relying on the automatic extension. Now, we all know that taxpayers who live abroad have until June 15th to file their taxes without penalty for failure to file penalty. However, when you have a US address, the IRS may deny that automatic extension to you, thinking that you don't live abroad. So then you have to go and send additional paperwork to prove that you do live abroad and you were entitled to the automatic extension. It's much easier just to go ahead and file an extension before April 15th. There's no questions asked, and it will extend the time to file until October 15th. If you have foreign investments, you probably need to file an extension, as many times the constancias and other information that you will need is not available by April 15th. Another thing I want to mention is the federal transfer certificate, and this is a word of caution. When a person dies outside of the US, if the brokerage or bank knows that the person is a foreign resident, they may request a federal transfer certificate before releasing the funds to the joint tenant or to the beneficiary. Once application is made for a transfer certificate, it can take the IRS 9 to 12 months to issue that. And so in the meantime, this person that you thought was going to have funds upon your death has no access to those funds. So if you have accounts that have joint tenancy or beneficiary, make sure that that person, if it's a significant other or a spouse, make sure that person has a source of income and funds in their own name until they can resolve this problem in the event that the brokerage or bank asks for it. A very common error that I see time and time again is people come to me and say, my brokerage sent me a W-8 Ben and I need to fill this out and return it. Let me make clear to everyone, if you are a citizen or a legal green card holder, you will never ever fill out a W-8 Ben. You will always fill out a W-9. So here's an example of a W-9. It's nothing more than a form that you put your information on, including your social security number, and sign it and send it to the bank or to the brokerage firm. It simply attests that that is your true social security number. However, if you fill out a W-8 Ben, instead of getting 1099s, you will start getting 1042s. Your tax return can no longer be filed electronically because 1042s don't go with a resident tax return. It has to be sent on paper and you wait 6 to 9 months for processing. So if the brokerage or bank has your foreign address, if they send you a W-8 Ben, don't even call them, don't even ask questions, just go online, download the W-9, just like it says on the instructions of the W-8 Ben. If you are a US citizen or other US person, including resident alien individual, you file a W-9. Just download the W-9, fill it out, sign it, and send it in. They'll be fine and happy with that. So a couple of opportunities just to recap when you live abroad is that you don't need to pay unnecessary state taxes. You can claim the foreign earned income exclusion. You can claim the foreign tax credit. Now, the foreign tax credit allows you to claim taxes paid in Mexico against your US tax burden. And you can claim this even on passive income. So if you've had withholding to the Mexican government, which you have interest and dividends you're going to have, then you can claim that on your US tax return. It's not a perfect formula, but it is designed to apply some of that money paid abroad to your US tax burden. You can still claim the child tax credit if you have children while you're working abroad. And you can file with your foreign spouse. So if any of you are married to a Mexican or other non-US person, you have the right to have that spouse treated as if he or she were a US resident for tax purposes. You're going to need to get an ITIN number. And to do that, you might need to get the help of a CAA. And a CAA, such as myself, is the only person who can verify foreign documents so that those documents don't have to be physically submitted to the IRS. But many times when a person is married to a spouse, they fail to take advantage of that. The spouse may not be working. And so the deduction, the standard deduction, goes from $12,500 to $24,800 just by filing jointly. That can save some people a significant amount of money just to file with a foreign spouse. Also, as of 2021 and these numbers over 2022, there's an above the line charitable deduction. It's worth $300 for single individuals, $600 for married individuals on next year's tax return. If you have donations to Mexican charities, you can deduct those up to the amount of Mexican income that you've had, and just claiming that may save you some money. The final tips that we've had just to share with you is that if you apply for Medicare, Medicare does always require a physical US address, but you can always have a different mailing address if you like. Also, don't forget, if you have trouble with your Social Security benefits, if you can't get a resolution on the telephone, you're always welcome to make an appointment with the Social Security Benefit Unit, which is located in many consulates and embassies. In fact, there is one of those units in the consulate in Guadalajara, and they assist many of our local people with Social Security benefits. And if you decide in the future that you want to have, if you're tired of paying bank fees, Social Security will direct deposit into foreign accounts where the IRS will not. So that's the end of my presentation for today. And now I will turn this over to Ilona.
Let me just ask John. John, this is Emily. Shall we take a few questions on Patrick's presentation or wait until Ilona is finished?
If Patrick is agreeable and Ilona doesn't mind, I think that's more appropriate before people lose their train of thought.
Sure.
And may I just add that mine will be on a slightly different aspect of this. So all questions directed technically to Patrick will be the first ones that should be considered.
Okay, so why don't we do that? John, you were the first one with your hand up.
Oh, okay. This might be a mere clarification, Patrick. So I have filed FBARs since I've been here because, for example, my understanding was that even if for one day my control as a signatory over funds exceeded $10,000, I needed to file. I wired money in to buy a Mexican car and then immediately spent it, but I filed anyway.
Right.
Okay, what is different about the Form 8938, which I have not heard anything about up until now?
So the difference is the amount. For a single person, your assets have to have reached or surpassed 200,000 at the end of the year or 300,000 during the year.
Okay.
And unless
So-
you're go ahead.
Oh, so if I sell a piece of real estate, does that count?
If you deposit those funds in a financial institution and you have more than that amount of money, then yes, you would need to report on the 8938.
Thank you very much.
You're welcome.
Okay, I'm not reading comments in the chat that didn't end with question marks. And I'm just going to ask the questions as they were written, whether or not I think they make sense. So here we go. Are IRA distributions also exempt as are pensions and Social Security?
Yes, the IRAs are really considered pensions, and that's not really clear in the tax treaty. But yes, the practice has been that IRA distributions are exempt from Mexican taxation.
Thanks. Also, are Roth IRA distribution exempt from Mexican taxes like they are in the US?
They would be exempt not because they're Roth. They would be exempt because it is a type of pension that was earned in the US.
Okay. If you didn't declare an account, can you declare it for past years? How many years can you go backwards to fix something if you weren't doing it before?
They say that you should file, this is for the foreign account report.
You will have to deduce that yourself.
Okay, so the recommendation is that you go back 6 years for the foreign account report. And you also need to go back at least 3 years to claim the income that maybe you have not claimed on your tax return. That is called quiet disclosure. I know that people have quietly disclosed that and have had no problems whatsoever, but you may also want to seek professional guidance if you need to go back and declare years that you've not declared before.
Thank you. Even though someone answered this question in the chat, I will still direct it to you. Does the foreign tax credit include property tax on homes paid in Mexico?
It would not include So if the foreign tax credit would be available to you if you sold a rental property. So if you sold a rental property and you pay tax on that, that would be a case where you could claim the foreign tax credit. However, if you're talking about property taxes, then that's not part of the foreign tax credit.
Thanks. Paul has his hand up. Paul, do you still have a question?
Yes, I do. Thanks. Hopefully everyone can hear me. Can everyone hear
We
me?
can hear you.
Yes.
Okay, great. I actually have two questions. One of them, I wanted to clarify, Patrick, your advice on the address on page 1 of the 1040.
Mhm.
I live here in Mexico and I have used my Mexican address in that space.
Right.
But I think I heard you recommend, I do have a US address at my father-in-law's where I receive mail. I think what I heard you suggest was to use that address on the page 1, something like in care of Steve Eichler at
Yes.
6518, Virginia address.
Yes. That is
Um,
my recommendation when living in Mexico.
Would it be useful, do you think, to include an attachment to the 1040 explaining that that's the mailing address and not my home address or my resident address?
No. And the reason is because when the IRS wants to know where you live, they're going to ask for it. So on the foreign exclusion that I was talking about, where people who are working abroad can exclude that income from US taxation. On that form, the IRS does ask for your home address. And that can be distinct from the address that's on the 1040. So when they want to know where you live, they will ask for it on the form. Otherwise, they just want to know where you can receive notification.
Okay. I know many states, I'll use me as an example. I also file a Virginia non-resident return because I have a rental property in Virginia.
Mhm.
Virginia asks for a copy of my federal tax return to be included with that return.
Right.
On the Virginia return, I have also used my foreign resident address because I don't want to put a Virginia address on it, because then I guess to me it looks like I'm then a resident of Virginia, right?
Right.
I mean, I don't know what you can say about that, but I'm a little leery that, having different addresses on the Virginia address of my father-in-law on the federal return as in care of might trigger, Virginia to think I live there and am filing an incorrect return.
It could. And in fact, I have seen that before. Most people have a different state address from where they file their non-resident tax return. It could happen. It could happen that you would need to contact the revenue office and explain that to them, because the states are much more focused on where you live than is the federal government.
Yeah. Thank you. I do have, if you don't mind me monopolizing a little
Yeah,
bit more of this time.
I'd like us to move
Okay.
on, Paul, if you don't mind.
That's fine. It wasn't a personal question, but more general to something else Patrick said, but that's fine.
Okay, why don't we see whether that question is asked and we can circle back around to you if we have time.
Sure.
Okay, so someone asks, Mrs. Carr asks, so do all accounts have to be declared or just over $10,000?
So the question is specific. When the aggregate or the total value of all foreign accounts exceed $10,000, all accounts are reportable. So if you have 3 accounts and each of the accounts has 3,500, you have reached the $10,000, and all accounts must be reported, even those that never surpass the $10,000 limit.
Thanks. Julie asks, Patrick, what is a TIA?
So that was my question, but so that means if it's under 10,000 and it never passes 10,000, I don't have to report the accounts?
Correct. If it's never past 10,000, it's not reportable. And the other thing that I want to remind people is that let's say that you bring down money to buy a car you have to file a fine-send report for the year 2020. But then in 21, your bank account stays below 10,000 at all times. There's no need to file in the next year. It's year by year, the way that goes.
Okay, Tone, was your question answered?
Yes, mine was.
I don't think,
Okay. Blue, do you, wait, what, I have to circle back. What is a TIN? Who needs one? How do they get one? And how do you use the number?
Okay, so a TIN is a taxpayer identification number. For US citizens and legal residents, that's going to be your social security number. For a business, that's going to be your employer identification number. And for a person who is a non-US citizen, then they need to get what's called an ITIN, and that's an individual tax identification number. And you have to apply for that through the IRS.
Thanks. Blue asks, do you have to declare the profit on sale of a home in Mexico?
Yes, however, if it is your primary home and you have not declared, claimed the home exemption in the last 2 years, you can claim that exemption, although the home is abroad.
Thanks. Robin asks, she says, we get our income from IRA, 401 withdrawals, pension, and Social Security. Are these part of the $108,700 exclusion?
No, and in fact, let me be very clear about that. The only thing that can be excluded is earned income. And that means that that income is coming from self-employment or from wages. In other words, you're actively working and you're actively working in a foreign country.
Thanks for clarifying that. Okay, I have 3 more questions. Do the Mexican banks report interest income on my account?
The Mexican banks are reporting that to the Mexican IRS or SAT. At
And
this
not to
point,
the US?
they're not reporting it to the US. However, they are reporting accounts that have balances of more than $50,000. And so that's certainly a place you never want to be, is when you have a foreign account that's getting reported to the US by Mexico, but you're not reporting it. So.
Okay, in recent years, I have been unable to e-sign or e-file. Any idea why this might be, or suggestions for how to fix it?
It may be that you have an identity PIN and you need to go onto the IRS website and download that, or create the profile, which would allow you to get that PIN number, which we have to include when filing your tax return electronically. This is generally for people who have experienced identity fraud in the past.
JC Ashun, I'm sorry, it seems like you put half of a question in there.
Yes, thank you. I apologize. It had to do with my address in California. It's where my son lives, and I just sold my condo there this summer. But anyway, he's on my POA and everything is in my trust, even in my bank account in California. Does that make any difference? I mean, to how I mean, it doesn't matter. It's like, I don't know. I don't really know what. I had a question, but
That's okay. So you're still a resident of Mexico. You know, if the facts indicate that your primary residence is in Mexico, then you would have sold your place and you would be declaring, filing a California non-resident tax return, reporting the sale of your condo.
okay, yeah, which is under 250, which shouldn't be.
Right. And the other thing is, and I lost my train of thought on this, but if people who are from or have an address in California or Massachusetts, New York, if you ever if you don't file a tax return, and this is what I tell my clients, that if you ever get a letter from the state, instead of taking your time to answer that letter as to why you're not a resident or why you didn't file a tax return, call me. In a few minutes, I can zip off a non-resident tax return to the state, and that usually answers all of their questions.
Perfecto, gracias.
Thanks a lot, Patrick. John, we're coming up on the 1 hour mark, so I think we need to move on to Ilona's presentation.
I agree completely. Thank you for that reminder. So Ilona, we hand the microphone metaphorically to you.
Thank you. I'm going to first share my screen. And let's see, how am I going to get to my point here? I'm supposed to get into, let me take a second really quickly to say I'm humbly and very honored to have the chair of the Democrats Abroad Global Taxation Force visiting with us tonight. And that's Carmelin Pulse. I hope I pronounced you correctly, from Sydney, is it? You're tuning in from Australia. It's a very special thing because the task force is working so hard for you. So to have the actual chair of this here is really special. Let me go back quickly enough to the share screen. There we go. There it's okay. And I need to just put it into the presentation format. Okay, is that visible for everyone now?
Yes.
Yeah.
Okay, so first of all, the address situation is getting more complicated, and that's certainly one of my problems as well. I'm going to be representing individuals who, one, left the US ages and ages ago. We've had our roots inside other countries for so long that we would like to have our rights continued and respected for being able to reside abroad and pay taxes duly to the countries that we're residents in, as opposed to having to pay to the United States, especially when the income is from non-US sources. And so that's why I said that the Democrats Abroad Task Force is very much working on this. Now, one of the things that, just as a comparison to what Patrick was saying quickly about addresses, is when I first went over in 1980s, there was no problem at all for US financial institutions who accepted us living abroad. We had I had credit cards with my Italian address and US credit cards and so on. Then the Patriot Act was passed after 9/11. And immediately the financial institutions in the US got terribly worried that all of us with foreign addresses had to be terrorists. And then comes 2010, which has made things even worse. And that's where countries got very fearful of us as residents in their countries. And the reason that I think this is a critical point is because we've had to justify ourselves being Americans. Many of us have been able to reinstate ourselves with our financial institutions, but we're still not allowed to communicate with them. So what happens then and why? And that's essentially because there's this misunderstandings and fear. If I live outside the US, will I have to pay more taxes? Will I have to pay double taxes if I belong to more than one country? I'm a dual citizen, for example. We don't need to worry about the forms themselves. There are just more of them, and they're very annoying. And we'd like to have that flexibility improved on, but essentially banking transparency and money laundering are very much a global concern. And as you know, that there's two things that have just happened. One of them is the Pandora Papers, which we certainly hope is going to nail a few of these people who are billionaires who have been avoiding paying taxes. And the other, of course, is the is just now with the corporate tax that has been imposed by the G20, which we also hope will take into consideration companies like Google and Amazon, who have been abusing. I mean, they have put the little folks like us in trouble because of their ability to be able to not pay taxes. And we're stuck with the tab. Okay, next up. Why claim to be a resident abroad? Well, there's lots of reasons. Many of us have gone abroad for global opportunities, and it's a social right. Again, Democrats Abroad and now other agents and other groups are beginning to represent us abroad, of which I'll talk about in a minute. But for instance, I worked for the UN. I had and I had to I was not allowed to use a US address because I was considered an international servant. So it didn't make any difference in the beginning, but now it certainly does. The other is many people marry. They have children abroad. This is a right. This should not be considered an exception. There's pride in being a global citizen. You may be an owner of a foreign-based business and be very proud of the communication and interaction you have with others. And so far, the tax exemptions have been minimal, but they have helped, but more fairness is needed. So that's where I'm just going to very quickly go into this. And there's so much more that's coming out. It's a very exciting time because just in the last few months, there have been some major headways. And one of them is that what we need to do is get more individuals involved, just as far as voting as well. But certainly tax reform will happen when enough Americans reach out to the representatives and demand it. So it's very, we may stand to lose those rights. As Patrick has emphasized, the issue of address is now very critical. I'm in a situation where I'm still declaring Italy on my forms, and I've been in big trouble already with this. And it's like, why? Why not? I mean, that's where my banking is. I was living there. I needed to have a bank account, need to manage my money in euro and so on. Okay, at any rate, going into this very quickly, just on the 6th of November, just this last Sunday, was 10th anniversary of the Democrats Abroad, this task force, which has almost finalized a bill to vastly simplify filing for most US citizens. So it's a watch this space, and we, as our chapter here, will try to put up as much information about these advantages that are being lobbied for by our very small group. But it's a very important effort. And the DA coalition now with American Citizens Abroad, there's now a number of groups who are trying to argue this for the residency-based taxation, not citizen-based taxation. And again, this is important because if you decide to retire, for example, those of you in Mexico, do consider yourselves extremely lucky that Mexico has been so lenient. Other countries will not be. I'm also a resident in Italy, by which I have to stay 6 months out of the year. So I don't have to have a third country from which I'm involved with my taxes. The other advantage, of course, is the fact that for those of us who have been away for as long or who have roots deeply ingrained in other countries, it just makes more sense. It's just more logical. So there's going to be various appeals that will be coming up, which are requesting you to write to your representatives. We're going to try to do more at our level to make people aware of those opportunities to try to force this issue, because this would, of course, resolve, as Patrick would agree, a lot of the reasons that we have to file all those extra forms. And the complications that have been added, John, you didn't know about the IRS getting in the picture. It was just fine when we were just filing with the Department of Treasury for our tax, for our accounts abroad. That was easy, it was normal, it was understandable. But now then they had conflicts of deadlines with IRS wanting one. Nobody communicates to each other. Social Security doesn't communicate with IRS. They certainly don't communicate with financial institutions. When I had to justify that I was an American, I said, don't you see that I have a Social Security number? No, they don't see those things. So at any rate, I just want to say is Democrats Abroad is just one of the groups that is working on your behalf. And certainly in the case of the Taxation Task Force is managing to make some waves, but it's a huge amount of work that's required. And it just means that everybody should become more aware of our rights that we would like to continue to maintain, that we are allowed to live outside the country, that we are allowed to take up residency as a retiree as well. And those of you who are just newbies who have come over, you don't realize what it's been like for a lot of years for the rest of us. Anyway, that's my point. I'm very happy to take questions as well. But basically, as I said, I wanted to emphasize, watch this space.
Thank you, Ilona. For everyone's information, Carmeland has posted information about materials that will be coming out shortly where folks can get engaged in this advocating effort. So please take a note of those. And Emily, were there other questions in the chat?
There's a question in response to Ilona's presentation. Either Ilona or Patrick can answer it, I suppose. It is, I have heard that any income earned over $600, I imagine, has to be reported to the IRS. Can you speak on this? Will I have to pay tax on $600 of earnings outside the US? Are there other issues affecting freelancers?
No, I'll leave that to Patrick. It's a pretty easy answer.
Okay, so yes, that would be considered, freelancing would be self-employment. That would be reportable as well as your expenses related to that. And it would be subject to the 15.3% self-employment tax. But if you qualify, you may be able to exclude that from federal taxation. And when we say 15.3% self-employment tax, remember, that's what helps your Social Security. So if you need to pay a tax, that's one of the best ones to pay.
There's another question in here, I think also for you, Patrick. Why does my Mexican bank require me to own a home in order to make a deposit? Is this a money laundering concern?
I think that may be a bank policy because I have Mexican accounts and I don't have that. They don't know anything of my home ownership.
Nor that's also my case with my back. They don't know whether I own or not. I don't see any other questions in the chat.
I might ask whether Carmeline would like to say something since we are so honored to have her here with us.
Hi, I would be delighted to say something. Thank you for the invitation. Yes, I did want to draw your attention to the bill that we're about to see introduced. It will greatly simplify tax filing for ordinary income earners. This is not for you if you live off your PFIX and your trust fund accounts, but it's for ordinary Americans. Our data suggests 75% of Americans abroad will fit into the category of those who can file with this new form that the bill calls upon Treasury to create. It also expands the foreign earned income exclusion to include some types of income that it does not currently include. I have just learned through Patrick's presentation that you have a really good double taxation treaty, much better than most places in the world. So a lot of retirement income is included, but for those who live in countries on federal government benefits or even receive CARES benefit or unemployment or parental leave, these types of income are not shielded from double taxation. So these are going to be now included in the foreign earned income exclusion and a couple other things as well, scholarships and fellowship grants, things like that. So that's in the bill. And it's a lovely bill. It's to be introduced by Representative Don Beyer of the Virginia 8, and we're very grateful to him, but we want this reform to be included in the Build Back Better bill or in some other form of legislation that's going to be passed this year. It currently is a standalone bill. So we take the language, we take the provision, and we are now working to persuade the Senate to include it in their version of the Build Back Better bill. So that's where the advocacy is at. This is like hot off the press. And yeah, wish us luck with our meetings this week, because persuading the Senate to embrace this with as much enthusiasm as we've received in the House is going to be really important. So, and we'll be, as soon as the bill is published, we'll be circulating this campaign guide for you to use to make phone calls or write electronic messages to your members of Congress. And we strongly encourage you to pick up the phone or get to your computer and write to your representative and your senators about this reform, because it's really going to move the dial for Americans abroad. It's not residency-based taxation. That's our long-term goal. That's going to address the problems, the litany of problems that exist for us, because all these areas of the tax code were written without giving due consideration to the impact they would have on Americans who live abroad. That whole list of problems would take years and years and years if we were to address them on a piecemeal basis. Residency-based taxation, depending on the way it would be implemented, could address many of those all at once. So that's a long-term goal of Democrats Abroad, and the other organizations, as Ilona has noted, we're advocating in support of Americans
I didn't
abroad.
want to be rude and leave the meeting, but I can.
So we look forward to working with all those other groups going forward on the introduction of residency-based taxation, and that's a fight for another day.
May I just add quickly that I've received a request from the taxation force to send to my representatives about the reconciliation bill. And that worked very well, where you provided a template for signature, which went directly to my New Mexican, although New Mexico's not a problem, but at any rate, it went to my representatives. And I just want to say more of those efforts are really appreciated. We can do a direct work without even, for those of us who've been away a long time, not even necessarily knowing who all is representing us.
I guess it's the same.
Carmelan, this is John Boothby again, chapter chair here in Lake Chapala. Thank you for joining us and for the work you're doing on behalf of all Americans living abroad. Let me take a moment and remind people to mute themselves. There is ongoing background chatter that I keep hearing. Thank you for doing that. And then Patrick, would you be willing to put your ending slide with your contact information back on the screen, please? We've had at least one person ask for that.
Sure.
Should I just delete, or
Yes.
you'll just change out?
Yeah, if you would just change out,
I'll
please.
say
for him.
stop share. Okay.
Thank you, Patrick.
You're most welcome. An email is the best way to reach us, by the way, right now.
All right. Okay, so Emily, are you still with us? And would you like to handle the questions that continue to pop up, or you want me to go ahead?
I don't see any more questions, John.
Oh, okay.
Will the recording be available? There's a question.
Yes, I have recorded it, and I will. I would invite people to request it because we don't have an easy method of capturing everybody to send it out. So if you would like a recording, the email address is, boy, I hope I get this right. mx-Lake Chapala at Democrats Abroad.
John,
Yes,
John, can you put that on the chat?
yes, I will. And as I'm doing that, are there any final questions? You could speak up if you wish before we conclude today's session.
This is Dee Dee, and I just want to thank Patrick, Carmelan, and Ilona for speaking today. I think we had a great response, and look forward to more presentations like this. Thank you.
And thank you for inviting us.
Thank you very much. Yes.
Oh, actually, I do have a follow-up question, if you don't mind, Patrick. So those of us in DA well, all of us, our primary objective is to help Americans living abroad register to vote and get their ballots and get them returned.
Mhm.
And as we've done what we call GOTV, get out the vote activities, I know I have personally heard often the commentary that people they're not reluctant, but they have some concerns about registering to vote because they're afraid it will lead to tax liability in a state. And it was nice to hear you say that voting address alone does not constitute tax liability.
Correct.
And I know you can't speak for all 50 states because presumably they all have 50 different ways of interpreting that. But if you have anything you can do to expand upon that or add more reassurance, have at it.
Well, when registering to vote, really the only option, my understanding is the only option you have is that you have to register based on the last physical address that you had in the US.
Right.
So it's not that you're deciding where you want to vote. It's that you lived there at one time in the past and you have a right to vote as a citizen, even in state and local elections. And so exercising your right to vote does not give that state a right to tax you if the facts indicate that you are indeed a resident of Mexico.
Okay. That actually is clarifying to me.
I'm sorry, this is Emily. I'm national chair of Get Out the Vote for Democrats Abroad Mexico. Not all of us have the right to vote in state and local elections. It's more complicated a question than that, but all US citizens have the right to vote in federal elections.
Right.
Thank you.
It depends on the state.
Isn't the identity issue coming up now too? This is something we need to work on from that point of view of if we lose our driver's licenses and so on and so forth in a state, how will we be able to continue to vote? This is certainly going to be my case. I don't have a residence in the US.
Right, and I'm worried about that too, because I'm about to lose my Texas driver's license. So if the new so-called voter protection laws require us to show state ID in order to vote from abroad, thousands upon thousands of us will be disenfranchised. So we're going to be keeping an eye on that for the coming year, for the midterms.
I had a comment on this issue of the convergence of voting and taxation as well. The figures for tax return filers and voter participation for 2020 are very, very close. And what we also have heard from people who participated in research that we've done, people who are specifically not compliant with their tax return obligations, is that they avoid taxation. They avoid all engagement with US federal government services. They just want to keep their head below the parapet. They just want to stay out of the line of fire. So if we can improve tax compliance by making it easier, we will not only expand compliance, which is always a priority of government, but also will free up that many more people to register to vote. And that also has a benefit to all of us, and it has a benefit to our members of Congress to see more people participating in voting. Another reason to support our reform.
Mm-hmm.
Okay. Thank you. Thank you, Ilona. Thank you, Patrick. I hope for everyone else this was as valuable and insightful as it has been for me. There are so many points here that resonated in a functional way for me. I'm very excited to have been here to hear it. So thank you all very much. Please note on the screen, I hope you can see that January 15th is International Voter Registration Day. So make sure that I'm speaking, I'll let, Emily, would you like to speak on behalf of this rather than me put words in your mouth?
Sure, John. Democrats Abroad Mexico will be holding a Zoom voting workshop on January 15th. Watch your email for announcements. We will be introducing people to voting from abroad. That'll be a short part of it. Most of the workshop will be devoted to helping people understand how to fill out the federal postcard application to receive an absentee ballot. We'll go over that for people on Zoom and answer questions. I hope that all of you will attend.
Thank you so much. Okay, with that, we will say thank you very much to all. Hope you can join us again on a future program. Thank you especially to our two presenters. And have a wonderful evening or morning, whatever it is there with you, Carmel Ann.
Thanks, John.
Bye.
Thanks, John.
Thanks, Patrick.
Thanks all.
Thanks, Ilona.
Thanks, Ilona.
Okay.
Thanks, Ilona. Bye-bye.
Bye.
Bye.
Thanks.
Everyone.
Hi, all.